Erica mentioned your op-ed in the New York Times, where you warn that jubilant investors are pushing the market to historic heights. And then you talk about some of the things that you're not a great fan of that is going on in the current administration. You talk about tariffs and things that tend to not be, let's call it, free market. Um, how do you reconcile your advice of staying in the market with all the things that are, and we'll get to a bunch of the individual things, but maybe start off with a framework, because the way the article read was, well, this is wrong, this is wrong, this is wrong, this is wrong, but stay in the market anyway. Is that a fair characterization?
Sure. Okay, Jim. Let me talk about that. You've got exactly what I said in that piece. Let me just say, since we're talking a little bit about politics, I am a lifelong Republican. You had mentioned in the introduction that I had spent time on the President's Council of Economic Advisors. This was in a Republican administration. So I consider myself politically really quite conservative. And having said that, I am very upset about a lot of things that this administration is doing, in that I think many cases they don't believe in markets. And I think that a world trading system makes all of us richer, not poorer. And I think tariffs are going to make us a lot poorer. If we have a tariff on, for example, Canadian aluminum, where Canada has a big comparative advantage in producing aluminum, and instead we're going to try to do it ourselves, which I'm not even sure we could do, because I don't think we've got the power to do it. And Canadian aluminum manufacturing is done almost exclusively with hydropower, which Canada is blessed with. We're going to put tariffs on aluminum. We're going to be worse off. Canada's going to be worse off. We're going to be worse off. I think it's a terrible thing. I think we're a nation of immigrants. I wouldn't be here if my grandparents hadn't come here as immigrants. I don't like, I think we certainly should have legal immigration, but I don't like the idea of rounding up as many immigrants as we can find, and making it harder to get H-1B visas. I think just a lot of this is wrong. I don't think the government ought to take stakes in companies. I think that's not capitalism as I understand it. That's, I think, the wrong way to do it. And yes, you're absolutely right. I think there are unusual risks today, and they scare me.
Do they
Why do I
you?
say? Why do I say stay in the market? Well, I'll give you two reasons. First of all, I think a lot of these things are quite inflationary. I think the tariffs will be inflationary. I think that cutting the labor force by making immigration almost impossible now is going to be inflationary. And if we're going to be in an inflationary environment, you don't want to sell all your common stocks, because that's the best way that you will be able to hedge. Because remember that stocks represent ownership of factories, of real assets that will appreciate with inflation. So the first reason to stay involved in the stock market is that some of the bad things that are going to happen if we persist in what we're doing will not hurt common stocks. They'll actually help common stocks. Secondly, one of the things we ought to know about investing and about our political system is we have gone through waves of tariffs, of we don't want immigration, we don't want civil liberties, and it's not forever. And one of the things is, and I did this in the New York Times article that you mentioned. One of the quotes, he didn't actually say it, but falsely attributed to Winston Churchill, is that, you know, what happens in the United States? They sometimes do a lot of crazy things, but eventually they get things right. Donald Trump is not forever. And we are not going to, this doesn't mean that this is the permanent regime in the United States. And, you know, as they say in the Bible, this too will pass. I'm not willing to say that we're going to continue with this craziness forever. So the fact that we're doing some bad things now doesn't mean that we're going to be doing bad things forever. And the third point about staying in is if you try to time it, if you try to say, I mean, look at the poor people who, what the market went down 10% right after, quote, Liberation Day. And everyone was throwing up their hands saying, oh my God, this is the end of the world. Those people missed a huge increase in stock prices. When you try to time the market, you're almost invariably going to get it wrong. And those who did this after Liberation Day are kicking themselves. Don't try to do it. Please, you, as much as it needs fortitude to stay the course, I am absolutely convinced that people who stay the course will turn out with better results than people who try to time the market. So, yes, I'm worried, but I say that doesn't mean I'm going to sell all my stocks, because this will not necessarily be forever. And to the extent that there are bad results, they're likely to be inflationary. And in an era of inflation, and unfortunately, I think the way we're going to get rid of our budget deficit is the way we did after World War II. We inflated it away. And that's what I think is going to happen. I don't like our budget deficit, but I don't think we're going to solve this by good fiscal policy. I think we're going to solve it with inflation. And if we are going to be living in even a 2% inflation world, you still need common stocks in your portfolio.